Hi, my name is Troy Lars and I run a blog called troylars.co.za www.troylas.co.za where we share informative videos on financial plannings here in South Africa to help you as a potential investor. So today we're sitting in August 2019. We're out in this beautiful part of Natal at Wyford Farm where we come on a regular basis as a family, and we're about to enter a very turbulent market. We're looking at junk status possibly happening in terms of the bond market. A lot of money will be leaving South Africa if that had to happen. It already has been priced into the market, and we're really feeling a large flow of bonds leaving the country. Equity markets taken a bit of a hiding. If you look at the JSE as it stands this morning, it's 0.5% up year on year. Interest rates have been coming down. Property hasn't done so well. So the question is, where do you put your money? So at this particular stage, I think you need to look at the goal that you need to achieve and the length of that particular goal. In the short term, March 2019, if you're looking at short term, I would stay invested into cash and fixed deposits and money market type of instruments. If you're looking at long term, there's value to be had, but I certainly think for the rest of the remainder of this year, 2019, it's going to be a very difficult year for equities to return. We're looking at turbulent times in terms of the trade wars with the US. We're looking at a very volatile market. Brexit's still happening. Boris has got his hands full in the UK. And again, the trade war's got a huge effect globally. There's talk of a global recession. Looking at in terms of our own markets, Ramaphosa and the ANC having a lot of in-house fighting and that type of thing that's happening, not creating a lot of confidence in terms of our local markets. So I think on the short term, you won't be expecting great returns, but there's certainly value to be made. But again, it comes back to your role of investing and your time period you're investing. Right now, our recommendation is looking at balanced funds and those type of funds where they've got a range of asset classes covered under one fund. Good place to be if you're looking at medium to long term, because it allows the fund manager to then basically have exposure in all the asset classes. I think in times like this, diversity is going to help. But I must warn that in terms of expectation, certainly for the remainder of 2019, I don't see equities providing a huge return. But if you invested into equities, you invested for the long term. And just bear that in mind when you look at the equity market. Don't look at it on a daily basis. Don't look at it on a weekly basis or monthly basis. Look at the long term. Look at the funds that you're using, whether they're geared for 3 or 5 year, and look at the return in terms of their benchmark that they're achieving over a 3 or 5 year period. But certainly as it stands right now, my expectations is that there's a strong possibility we're going to go to junk status. That's going to affect the markets negatively. We're going to see bonds are starting to take a bit of a hiding at the moment. And cash at the moment is king. But for how long it's going to be king, it's king for the short term. So please, guys, if you've got any questions about investing, drop us a line on Troy, Troy, at troylars.co.za, www.troylas.co.za. And we look forward to giving you comments and answering any financial questions that you might have from a financial planning perspective. Stay tuned for this and others. Speak to you soon. Cheers.